Well, it's Facebook Day, and the stock starts trading on the NASDAQ a little bit later on this morning, 11 o'clock Eastern. Our next guest says that Facebook isn't really selling for what you'd call a bargain. In fact, he calls the stock significantly overpriced. For more, we're joined by Brian Hamilton. He's CEO of SageWorks, and he's joining us from Raleigh, North Carolina. Brian, great to have a few moments with you here this morning. Welcome to our show. I'm wondering why you think this IPO is, why it's overpriced.
Well, if you look at historical values, for example, Microsoft, when they went public, they were trading at 5 times annual trailing revenue. If you look at Apple right now, obviously incredible brand, they manufacture goods and services. If you used Facebook's sales multiple, Apple would be valued at over $2 trillion. Facebook is going to be traded at about 25 times trailing revenue. So it's almost unprecedented. Good company, check. They've got revenues, check. They've got profitability, check. They've got a good space they're in, check. But valuation, no check. No question about it. The company's definitely overvalued, at least using traditional metrics that we use to evaluate companies.
Now, Brian, a lot of people said this about Google when Google went public a number of years ago. And of course, sure, Google's stock is up tremendously since then, but its metrics are actually fairly reasonable. I mean, it trades at a PE of less than 19. That's not a crazy number. Is Facebook capable of catching up to this valuation over time?
Yeah, that's an incredible question. I was hoping you wouldn't mention Google because they also traded, when they first came out in fairness, at a very high sales multiple. But remember, Google was much more profitable, and they were more profitable for a longer period of time. Here's the thing, we don't know, right? In a year from now, you can invite me back, and the value of Facebook may go way up, and we don't really know. But in an IPO setting, what you want is you want the founders and the original investors to win. You want them driving the fancy cars and getting wealthy. We all want that. That's capitalism. But you also want the buyers of the stock to win. So in this case, kind of the radar or the measure is a little bit more toward the founders or the original investors, meaning it's just overvalued. And you can look at Google, you look at Microsoft, you look at companies that have had incredible brand or a great space, but this is unprecedented. Facebook has a very good opinion of itself and its value.
When we looked at the range, you know, even 3 days ago, we were sort of starting at a low range of $28, and of course that got raised over the last sort of 72 hours. Would they have been any better on the valuation side if they'd stayed in that lower range, or was it also sort of astronomical?
Astronomical. They've been high right from the get-go. I mean, really. And remember, we've got to look through this over history, whether it's U.S. Steel, whether it's Ford Motor Company, whether it's GE, whether it's Microsoft. I mean, who had a better or a more commanding position than Microsoft? You remember those days. I'm dating myself. This is 1986, but they owned the entire software space. I mean, you literally couldn't get into software without microspace. So every company that goes public wants to think they're unique, right? I mean, that's the whole idea. We're unique, we're different, we're in a cloud-based environment, we own the world. But the truth is that, you know, they're not that different from some other notable companies. So why was Microsoft at 5 times sales and Facebook is at 25 times sales? You know, there's a big disparity. And again, for investors or people coming, you'd like to buy low and sell high. That's the idea. Or you want to buy medium and sell high. Here, you're buying high, and you may make money, but you're betting on much higher later on. And when you get in that sort of risk paradigm, you're in a little bit more of a dangerous space.
Brian, leaving the price of the shares aside, just talking about the company, is this a company that does have the capacity to significantly grow revenues and earnings over time?
Yeah, the magic question. That is a magic question, because look at it this way, right? With other companies that have gone public, it's not to say that their upside is unlimited, but it seems like as if some of those companies have had more room to grow. Right now, Facebook has a commanding position. There are people out there, you know, some of them are out there, they're all through the world, where they're just not going to be Facebook users. So you're asking the magic question, meaning, They can't continue, or maybe they can, if there's new planets we discover where there's life and there's more Facebook users. But right now there's a concern that their revenue could be constrained as they try to grow that revenue. So there's an upside lock on revenue. So you can't just assume that the growth of the past will be the growth of the future. So your question is really good. We just don't know is the answer.
Brian, what will they do with all this money? What will they buy, do you think, if we see a big shopping spree? What might be first on the list?
Wow, another good one. They operate in a cloud-based environment. They are profitable. They do not need a ton of cash. So when a company goes public, there's two reasons. We want the founders and we want the original investors to make money, but we also want that capital deployed in such a way where the company can continue to grow. Really, Facebook does not need a lot of cash. They will grow through acquisition. There's no doubt about that. But they don't really need a ton of cash. This is an IPO that's directed to get liquidity to investors, at least in my view.
Brian, so far we've seen Facebook really dominate the space that it's in, but, you know, it's an American company, it functions in English. Are there threats to it? It's to restrict its ability to get into other markets that use other languages?
Right, that's another big concern. This may be generational, you know, I'm a little old school on this one, but let's look at it this way. In the social media space, in this whole new category, in cloud computing, things are a lot more fluid than even 15 years ago. In answer to your question, we don't know. There might be another un-Facebook company out there or some other company where, you know, it's more cool to be on that site. I know with my kids, they use Facebook, and if their parents use Facebook, well, you know, they might not want to be in the space. Very interesting paradigm in social media. It's not like rock and roll, folks, but it's a little bit like that, right? There's a little bit more of an edge to it. It's more fluid, and it makes the revenue stream a little bit more, not dangerous, but a little bit less predictable. So in answer to your question, there could be another company out there that could get in their space. There's no doubt about it.
Brian,
and by the way, that can happen very quickly. Yep.
Yeah, it could be a quick reaction to that. I was noticing in Korea, the Korean users really expanded when the iPhone was launched there, because when you open up your iPhone, one of the first apps on it is Facebook. And if you don't know how to download a gazillion different apps, anyway, that really helped with the Korean market. How important is the link to various pieces of hardware on the mobile spectrum that Facebook get in there fast?
It's always important. And remember, it's another good point here, right? The divide between hardware and software used to be like two circles when there's no Venn diagram, there's no intersection. Right now, software is hardware, hardware is software. They're coming together, so those linkages are very important. In fairness to Facebook, they do a very good job at that, by the way. Reminiscent of Microsoft. They're 25 times higher than Microsoft in price, but they do a good job in all those linkages. But the old divides between hardware and software are basically evaporating. I mean, hardware is software, and they're kind of one. So Facebook does a good job with that.
Okay, Brian, so good to get your views. It'll be very interesting to see how this all goes in about 2 hours from now. Have a great day and weekend.
Thank you so much.
We're joined by Brian Hamilton. He's CEO of SageWorks, and he joined us from Raleigh in North Carolina.